Hey, what is up everyone? This is Evan Carthy from evancarthy.com, and today we're going to look at the crude oil price futures. We're going to look at how to trade this market for late September 2019. Today it's currently September 24th, 2019, fixed to be September 25th, and I just wanted to go over a couple of setups I've seen since I did a post regarding crude oil futures here about a week ago after the Iran attacks on the Saudi Aramco oil fields, based upon some setups that have presented themselves, and some other ones that I'm looking for here in the near future. So we'll go ahead and kick it off here. So this first chart right here, ignore this up here, that's a setup. We're going to go over here in a little bit, the 8.236 long. This is one I went over about a week and a half ago, again right after Iran attacked the Saudi Aramco oil fields. The blue box right here is the huge gap up that it had from the price all the way down here about 54.88, when it went all the way up to a high of about 62.34ish, around there. So we had this huge gap right here, and in that post I said, look, I'm waiting for price to come down and fill this gap right here. The reason why is it's not going to be a permanent thing about the oil fields being attacked to disrupt the supply of oil on a long-term basis. So I felt that the spike up is just going to be something you want to fade into, you want to sell into. You definitely don't want to be buyers up here, because I felt that prices could come down and fill this gap down here. You can see soon after it started retracing back into it, and now it's firmly into it, about halfway between it right now. Price is currently at 56.95 at the time of making this video, and I'm looking for prices to come down here and complete down around 54.88, 54.90. So we still have about about $2 left, something like that, for it to for the price of a barrel of crude oil to come back incomplete. So still looking at short. We also had this that I posted on there, the support line here, the resistance line up here that this channel had created for it, or this little area had created. And as you see, price had broken out for it. I wouldn't be surprised if price comes back up, touches that, and uses it as resistance to come back off of it. But this is clearly broken right now, so it's really, worthless. But I just used it as kind of like a reference for what the price was doing for it. So then I want to talk about a long setup, which is going to go in conjunction with this right here. It's one that I saw. It isn't currently live yet. It's one that we will be waiting on, and so what I'm doing is I'm waiting down for this gap to get completed before I add to some of my oil stocks, such as like ConocoPhillips, depending on what the price is doing with that, Ring Energy, Southwestern Energy. So using this right here, the high of 62.59, perfect. The low of 61.58, 61.59, good enough. So what we are looking for down here is, get this a little squinched up a little bit more. Here we go. The first entry is going to be down here at the negative 7.236 Fibonacci extension level. That's really the 8.236 Fibonacci extension level, because when you go negative, you have to add another 100 to it for whatever reason, the way they have it on there. And so that is going to be the first entry that we are waiting for it to hit. Once it does that, the exit is going to be up here, the yellow line, at 57.34. Now also notice where this first Fibonacci level entry is right here. It's just below where the gap is being filled. So even after that gap is going to get filled, I'm still expecting price to come down a little bit lower. So from about 54.88, 54.89, all the way down to about 54.34. So I think it lines up pretty good with it right there, and that's going to be the first entry for it. But if price continues to just blow way lower and lower, the next entry and the final entry is going to be down here at 40.29, the negative 21.236 Fibonacci extension level, and then from there you move your exit up here to just below the negative 7.236 at 54.33. So if I was getting in that trade, I'd probably make it just about 54.10, 54.15, something like that. Make sure I get out of it, because when it does tick up and hit it, I've seen it just tick up and hit it, barely touch it, but enough to complete the setup, but not enough for enough contracts to get you out of the trade, depending on what unit or what instrument you are trading. But it happens all the time, so I always make sure I always get out my trades a little bit earlier, rather than trying to hold on to every last penny and milk every trade for what it's worth. Get out with some good profit. So that's how that setup is going to go right here. It's the 15-minute chart, what I'm trading this off of. But definitely right down here, I think there's going to be some good support when this gap gets filled. Plus you have this Fibonacci level right here, looking for initiate the 8.236 long trade setup. Then I want to go over one other longer time frame over here. It's going to be the daily time frame, because I just want to show the type of resistance oil is going to look at, because I just do not believe oil is going to go and punch up above you know, the high 60s to the high 70 levels here anytime soon. I was actually the other month I was talking to this gentleman who has been tracking oil for a super long time, and he's got his own kind of school where he trains petroleum engineers, and he's telling me the history of the oil field. Actually, the price of oil averaging over $60 a barrel, $65 a barrel, is very rare. It's actually on the excuse me, $70 a barrel. It's not too often that happens, because when you look back over here, you know, through the history of oil over here, it never really started reaching above $70 a barrel, which a lot of people now consider as kind of like the average for it. So up until about August of 2005, price had never ever gone up and hit there. And so now obviously the global economy has gotten way larger than it was even back then 14-15 years ago, but it never really averaged over $70 until then. And then you see it shot up over here, had that parabolic rise up, huge drop down, then it started rising up here again before we had that huge recession down here, the huge massive sell-off, and now prices starting to slowly get back up. They had a huge sell-off right here, and now it's starting to go back up here a little bit more. But I just wanted to show up here because I think this level right here, this pitchfork, it's called the shift pitchfork. The reason why I like it better than Andrew's pitchfork is, see the median line right here, this red line, it goes as the halfway point between this pivot point high and pivot point low. So it smooths out the line a little bit more, and I find price reacts to it better. Let me draw Andrew's pitchfork real quick so you can see what the difference looks like. See, right there is Andrew's pitchfork, because they attach the median line to the pivot point high up there. So you get a lot more, it's more of like a 45-degree angle for it. So I prefer the shift pitchfork, but again, use what works for you. Now, I don't use it to trade directly off of. I use it as one of the criteria for my springboard trade that I use. Price has to either close above or below the median line as one of the criteria to get to the trade. But I also like to use it to see about where could be some areas of either support or major resistance. And so in this one, for instance, I think we have a really strong one right here, because I was messing around with the chart, saw this one today. Look how price came up to it, hit the lower green line of the shift pitchfork, and then just bam, like an anchor, just drop straight down. And so that's why I think here, moving forward in the future, when price eventually, you know, starts hitting it up again, which it will eventually. Like I said, I think we got some downside first, but eventually price will start working its way back up there, as you know, everyone needs oil to basically produce everything in the world. So it's eventually going to start getting up there, but we're going to see a lot of resistance as it works its way through there. So when it starts getting to this area over here, I think we're going to see lots of swings, lots of resistance levels being hit, it dropping back down, going up, dropping back down. So I think oil is usually extremely good at trade, but I think it'll be even better once it gets up here, you know, especially if you're a swing trader or a day trader looking to trade oil. You're going to see some really dramatic and some really big moves for it here, you know, the 5-minute charts, 15-minute charts, which usually do anyways, but I think it's going to be really grinding through here for a while before it pops up here and gets north of $70 again. So I still think, you know, we're still a couple years out from price actually getting up to and above that $70 mark. I know here we got up into it just for a little bit before price sold off, but before price really sticks into it, I think we're a couple years off for it. So I think we're definitely going to, you know, waffle around. However low it's going to go, I don't know, but definitely, you know, I'd say here in the 50s for sure. It could, you know, dip back into the 40s, but I think there's enough of a global demand for it that we're not going to see the huge oversupply that dropped it all the way down into the low 20s right there. So that's just want to show moving forward for it. So that's all I got for oil. Looking for the near term. In the near term, looking for more downside here to oil. It's currently 56.94. Looking for at least going down to about 54.85 plus that Fibonacci. And then right around there for this trade to get into around 54, 51. That's probably not perfectly accurate, but just below it, just below the gap, for that gap to be filled right there, just because it's such a large gap. I mean, the thing has come back being filled 9% of the time. Gaps come back and get filled. from an uptrend. So I think this is a pretty good bet that this thing's going to come back and get filled. So before some people are looking at getting long into there, to be honest, I would wait. I'd wait for at least another $2 pullback before I start thinking about nibbling into oil or oil related stocks, ETFs, futures, of course, oil futures, and anything else oil related. All right, that's what I got for today. Hope that helped, and thanks. Talk to you later. Bye.